Hello, we're here to cover ZBRA. Let's start by technical analysis first. This is the all history charts going back to 1991. And the stock has been in a long-term bull trend. It had this pullback in 05 and 06 and now coming back a bit in 07, surpassing this descending trend line. So maybe this was just a correction, this 05 and 06 move, a correction because the bull trend got a bit overextended here. But the technical analysis says this stock is going higher over the long term. Let's check the short-term chart. Okay, we had this nice jump here in mid-February, and now the stock is coming back and correcting half of that move to the 50% Fibonacci retracement level. And perhaps this is a nice spot to enter a position if you're looking for it. Let me see. Technical overview. ZBRA trend is long-term bullish. Over the short term, the stock is now approaching the 50% Fibonacci retracement level of the previous bull run, which can be a sweet spot to buy. Now a bit of fundamental analysis. This is the share count evolution over the years since 97, and you can see there hasn't been any dilution, because the average annual share count increase in fact was a decline, just a bit of a decline. So the company bought back some shares over the last 10 years or so, and the average annual market cap increase was 10%. So market cap has been growing at a 10% rate, and it is now $2.6 billion, more or less that, $2.6 billion. This is a balance sheet analysis. Long-term debt is 0 now, and the current ratio is extremely high, showing a very healthy, perhaps too healthy, cash position and short-term liquidity, with a current ratio of more than 11. Let's move on. This is the revenue evolution since 1997 until 06, and then we have the analysts' average estimates for 07 and 08. And revenues again have been growing 10% a year for the past 10 years, and the industry average growth was 8.2% in 2006 from the previous year. Gross margin is 49%, which is about the same as the industry average, and the price to sales ratio is a bit rich at 3.5 compared to the industry average of 1.7. Okay, let's move on from here. This is earnings per share plus net profit margin. We have earnings growing at about 9% a year on a long-term basis, and net profit margin, well, analysts are expecting it to drop to 13.5 and 14.4% in 08, but I believe they're being a bit conservative here, because the long-term trend is about 18% net profit margin, which is quite healthy, and I expect that to continue. I don't expect this decline here, they do. And so the price to earnings ratio is 19.7 and the industry average is 33.6. Perhaps ZBRA is a bit undervalued here. A bit, no, let me see how much. 19.7 divided by 33.6, about 40% undervalued. Fundamental overview. We had 0 dilution over the years. Balance sheet is one of the strongest I've ever seen, really, with a current ratio of 11 and 260 million in cash and equivalents. Average annual revenue growth is 10%, but it is expected to accelerate to 15% growth in 2007. Well, we don't know if that will be just a one-off or perhaps more of a long-term trend with faster growth. Forward earnings per share multiple is 19 and the industry average is 34, trailing earnings here. My long-term estimates. I consider the company will grow revenues at a 13%, so I'm considering it will accelerate its pace of growth, which was 10% for the past 10 years. I expect it to grow a bit more for the next 10 years. And net profit margin will be 18%, which has been the long-term average. So in 2017, ZBRA will have revenues of 3 billion, a net income of 540 million. Apply an average 16 times earnings multiple and get a market cap of 8.64 billion in 2017. An 8.64 billion market cap translates to a 123.71 price per share in 2017, and that means an average annual share price increase of 12.44%. General overview for ZBRA. ZBRA has close to perfection fundamentals. The only thing lacking is a bit stronger growth. I estimate the share price increasing 12.44% a year on average for the next 10 years, and I like to expect at least 16%. So everything is perfect, balance sheet is very strong, no dilution, but the company, I would like to see it growing a bit more, because just 12% a year, well, it's a nice return of course, but I like to have an expectancy of at least double the average market rate, which is 8%, so I'm looking for 16% or more. But definitely a great stock, and my rating on a 1 to 10 scale is 8 for ZBRA. So thank you, bye bye.